Well, good afternoon, Maverick traders. It's Joe with you here on October 9th, a Wednesday. Let's do a market roundup. You guys know the drill. Let's break down the meaningful news of the day. Let's take a look at these charts technically, and we'll share some trades with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you'll see that we had another up day. We're just continuing along with the trend that we've seen for quite some time. First off, the daily news. The U.S. markets move higher today, continuing its bullish pattern. We're also seeing that the U.S. rates and the equity markets in general look to be pricing in a dovish Fed, or basically a soft landing. There's a lot of reasons for people to put money to work here, at least when it comes to equities. There's plenty to worry about overseas and in light of that. But however, when it comes to where these markets are going and what the economy is looking like, it looks like we're going to get a pretty soft landing. How do we finish overall? Well, up 1% there on the Dow, the S&P just shy of that. The Q's up over 0.5%. Russell kind of flat, and oil and gold took a pause. Two of the most tumultuous movers as of late, especially oil in light of what's going on overseas. Now, what's interesting about that, the U.S. equity markets have just kind of been doing their own thing, regardless of any sort of fears or worries. So how do we finish today? The advanced decline line. 54% advancers, 41 decliners, so not the strongest of days, but we did put in another notch higher, and we actually exceeded some pretty good levels on the SPY. I'll show you here in a second. Above, below, the 50-day moving average, 61% above, 39% below. So let's just get straight into the chart, and that's just about as good as it gets when it comes to a bull pullback, ascending triangle, corrective action, high base breakout, whatever you want to call this. I mean, technically it's a high base, or excuse me, an ascending triangle breakout pattern, but very, very consistent in the way that it moved. So a little reluctancy when it came up to it the first time to understand that was its first higher low that it set, pushed through it with a gap, consolidated a little bit, and then continued higher. Now, I connected the two, and this could be an ascending triangle, but if you guys really want to take a look at it as just a high base breakout, it's the exact same thing. I'd like to see a little bit more participation in the volume, but it's not necessary in light of kind of the numbers we're getting economically and what I'm seeing when it comes to investors. Now, of course, things can change or turn around, but if you just follow price action in general, it's an absolute no-brainer. Now, I'm also starting to see some pretty bullish signs in some of the others too. Here's the Qs. The diamonds look good as well. The Qs setting up a really decent ascending triangle pattern itself. It's a little short of it, but it's going the correct way. We've seen a pickup in the tech sector and the communication sector. So money's coming back into some of those darling stocks. Some of the trades that we have are on both of those. But once again, you can take a look at it of kind of a basing above its previous resistance here set in the end of August, or the overall ascending triangle pattern. It doesn't matter. They are both just bullish. Let's take a look at the heat map here. You can see just green across the board. So we're seeing some individual stocks within sectors that are being punished, or I should say sold into, and ones that are being purchased. There's plenty out there to be afraid of, but these markets just don't seem to have a problem putting money to work. So what can I do with that? Well, there's not much I can do with it, but give it exactly what it's due. We are in a wonderful ascending triangle pattern, high base breakout. We've got a moving average. The moving averages are separating as they move higher, the 50 sloping higher, the 20 sloping higher. We broke out of resistance. It's +3, +3, +3. That's where we're at. We've been +3 for a while. If it's not broke, let's don't fix it, right? So it's all +3, pretty easy to do. Doesn't mean that we can't consolidate here, or at least retrace once we break higher. That's totally fine. That's what these do. Break higher, consolidate, or pull back. Let's not look too far past that, is what I'm trying to say. So around the horn here, let's take a look at the potential trades. These have been carried over for a little while. Caterpillar and Hood. GILD is one that I do like in a sector that I deemed one of the weakest. I thought that healthcare was weak, and Moderna down there at the bottom, mRNA, is still showing some weakness. So let's start with the bulls here. Let's get into GILD. I like this. It's got a very similar pattern to what I'm seeing in the SPY. I'm sure it's maybe not the exact component of it, but it is showing kind of that same pattern of outperformance. High base here if you want to cut it there at this little gap that happened towards the beginning of September, but it is breaking out. Now it's reluctant, not a lot of volume. It's not like we're seeing stuff like this. It's low, but a slow play, sideways, horizontal, a lot of the money horizontal spread, diagonal spreads, targeted butterflies. If it's going to continue to move the way it's going, let's take advantage of it. So I do like GILD. Then I'm just going to go straight over to the bear side and just add to it. MBLY was one it has been on our list for a little bit. Now, it's not a very big breakdown, and it's actually showing a little bit of support, or I should say consolidation at this lower level. I tend to really like these. Now, we have a sloping 20-day that's moving higher. Could this creep a little bit higher and maybe retest, maybe, what do we want to call this, a little bit of a head and shoulders pattern? Sure. This is the game within the game. However, if this starts to slip, and it'll probably be pretty quick considering that this was a pretty good gap, right? It was a gap up, had spent 2 days there and then moved higher with some decent volume. So I imagine if it fails at that price point, it's going to revisit this area rather quickly. So credit spread, sideways to down, something with a little bit more time on it. Also, give it the flexibility to actually retrace to some of these higher levels. But I like these trades a lot because I can be patient with them, let them sit there and kind of marinate, especially if you've got net credit on it. So like a horizontal out of the money spread or a targeted butterfly. Even if it goes up a little bit, doesn't matter. Once that thing breaks down, hits a target, we can make an adjustment or take profits. So that's all I've got for today. I figured just a couple trades to get a little bit more in detail. But if you think about it, everything that's been weak has stayed there and everything that's strong is staying there. The U.S. equity markets have been difficult to read. And a lot of the work that I've done with you guys as of late is, hey, these things just go up and higher. We've got a war breaking out. Oil's going crazy. Economic slowdown. The Fed's cutting rates for a reason, but the soft landing's in line. We've got a political, we've got an election coming up. And yeah, there's plenty of worry. And that's what I'm seeing in the VIX. So folks, if you want to be validated, the volatility index is agreeing with you. It's up at the 20 area. However, unless you're bullish, just stay out because it is not going anywhere but up. The equity markets are very confident outside of pressures, any sort of fear or threat. Price action never lies. My bias is a little reluctant. I'm cautious as human nature, but price action never lies. If things are going up, it's going up. Somebody could say they're worried about the future, but if they put all their money in the stock market, well, they're not really worried about it. So let's just follow the price action. If your bias gets in the way to the point where it's going to hurt your decision making, stay out. We do have the CPI tomorrow, initial jobless claims as well. We have the PPI, consumer sentiment, on Friday. Folks, if that CPI number comes in line or lighter, I think we just take off. I don't know why we wouldn't. I think it's going to be overdone. I think it'll be overplayed. I don't think it's that important considering what we've seen in all sorts of other economic numbers and where the Fed is going. But if that CPI comes in line or a little lighter, I could see another surge to the upside. How long that lasts, I don't know. Check for earnings on trades. Corey mentioned yesterday that we are actually entering into earnings season. Just something to keep an eye on. All right, folks, thank you so much for joining me. We'll talk to you next time. Bye, everybody.